Hello everyone, this is Raghav from 7 Lending, and in today's video, I want to talk about B lender mortgages. Now, these are one of the most commonly misunderstood and underrated mortgages out there. And make sure you watch this video till the end because I'll share a key benefit of B lenders for business owners, which can help them save a ton of money. And let's jump right in. So, firstly, what are B lenders? B lenders are alternative mortgage lenders. They're not fake banks, individual lenders. They are typically big financial institutions with a different risk appetite and more flexibility than a bank. Some common names of B lenders in Canada include companies like Home Trust, Equitable Bank, Community Trust. Now, I want to talk about some misconception and myths. Myth number one, B lenders have crazy high rates. This is one of the most common misconception about B lenders, that they have high rates like 9 to 15%. But that's not the case. In fact, B lenders are usually only 1% higher. As of today, the B lenders rate are somewhere in the high 4% range out there, like 4.8, 4.9%. One thing to note is that B lenders do have a lender fee, which is often added. In some cases, it is 1%. Myth number two, B lenders are only for people with bad credit. Wrong. B lenders are actually perfect for people who are self employed, who may be new business owners, or who are writing off a big portion of their income for tax purposes. For maybe new immigrants with not enough credit history, for real estate investors who've maxed out at the banks and are buying maybe even under holdcos, and even for freelancers with non-traditional income like content creators, new business owners, etc. Now, B lenders use a common sense underwriting. They look at your cash flow based on the deposits on your bank account, not always your income tax documents. So it gives them a really good advantage. Myth number three, B lender mortgages are short term fixes. Well, not always. Most people use them as a 12 to 24-month bridge to rebuild credit and eventually refinance with the bank, but they have some really good options for 3 to 5 years. Now, for self employed people who want to maximize tax write offs and they're okay with the slightly higher rate, it makes a lot more sense instead of showing a lot of the income on their taxes to go with B lender, because they can take advantage of the write off and just go by income on their bank statement. Myth number four, B lenders are sketchy or predatory. Let's clear the air. Most B lenders are actually multi-billion-dollar institutions regulated by OSFI, which is the same regulator as the big banks. They are actually called B lenders because they have a different risk appetite and they're an alternative to the major banks. But that does not make them predatory. They're legitimate financial institutions, not fly by the air operations. That said, just like with any mortgage, make sure you read the fine print and especially your penalties, rates, etc., and you talk to a good mortgage professional. Now, we've talked about the misconception and myths. Let's talk about some of the common benefits of working with a B lender. Now, benefit number one is flexibility. When you go to an A lender, the max debt ratios they have might be 44 to 48%, but B lenders go to debt ratios up to 60, even up to 80% in some cases. That's huge for investors, self employed people, or anyone with maybe higher debt loads but strong asset. And credit score, when banks typically require 650 or 680, B lenders are a lot more flexible. They'll even look at people who got out of consumer proposal bankruptcies or with a thin credit history. Benefit number two, B lender mortgage may help improving your credit score. If you have a thin credit history, adding a secured mortgage helps in broadening your credit profile. And if you are consolidating high interest debt with the B lending mortgages and you have consistent payment history, this can help you over time to improve your credit score and eventually use this as a bridge to go refinance with a bank. Now, benefit number three, this is my favorite thing, is B lenders can help you potentially save a lot of money on taxes. Now, if you go to a typical bank, they would want you to qualify based on the net income if you're a business owner. Now, if I have to show 100,000 of a net income, I have to pay the taxes on that 100,000. But a business owner will have a lot more expensive and write-offs. A B lender mortgage will not often look at your net income, but look at your gross income and gross deposits, and thereby reducing the potential tax you have to pay to qualify for a big mortgage out there. This is one of the most important reasons why people like mortgage brokers themselves or realtors use B lending to qualify for their own homes, because it helps them get to their affordability, get the most amount of money at pretty good rates. So, hope this video was helpful. As always, mortgages are subjective. There's no one size fits all. But when you're out there and you have any questions, feel free to talk to us, because this is what we specialize with. But till then, I hope you found this video helpful, and talk to you the next time.